Hello everybody, welcome back to my channel Trading Secrets. This channel is for entertainment purposes only. For those of you who do not know, my name is Ali. I have over 20 years experience teaching accounting, economics, business and law through this channel. I'll be providing some stock analysis and a quick update on the $1 Million Challenge. So if anybody's not aware of this is a genuine investment of $1,000 to a return of $1 million over a period of 3 years using a strategy called compound return investing. So the objective is try to get 201 trades, each an average return of 3.5%. It's not 201 consecutive trades, we do take into account losses. So for further details about how to join us for less than $9 a month, information is available in the description below. In today's video, I'm going to be looking at a new valuation for MMTLP based on the recent NAPE Energy Conference where Bridge Hydrocarbons also attended. We're also going to be responding to some FUD and a recent article just published, and also sharing with you 4 stocks this week that we're going to look at for potential earnings beat. So stay tuned for that. Before we get started, let's have a look at what's happening in the market. So we can see here, first headline here from Bloomberg: slower US inflation is set to fuel the Fed rate cut optimism. So this is potentially good news. There is data showing potentially weakening pay pressures. So this could lead to a stronger market for 2024. But for what Biden is currently saying is that he's calling the S&P 500 record a sign of confidence in the US economy. But if we take another look at this, and we give a shout out here to Bar Chart, we can see that they've stated here the S&P 500, excluding the tech stocks, is currently trading at all-time lows against the tech stocks. So the tech stocks are actually pulling up the S&P 500. So if you have invested in stocks like Google, Meta and Nvidia, then certainly those have been doing exceptionally well. But take them away, then the S&P 500 is not as good. So let's finish off by having a look at earnings. So there are a number of prominent stocks that we're reporting this week. We have Datadog, Shopify, Coca-Cola, Moody, Sony, Twilio, Oxy, Coinbase, Roku, plus many more. So I'm going to be sharing with you 4 stocks that we are watching. So the first one is ticker symbol HUBS. So the prediction for this from Wall Street is post quarterly earnings of $1.54 per share, reflecting an increase of 38.7%. So we will be keeping an eye on HUBS. Revenue is also forecasted to be approximately $557 million, and that could represent an increase of 18.7% per year. So the other 3 stocks that we're also looking at with the potential earnings beat this week is ticker symbol SHOP, ticker symbol MNDY, and also ticker symbol DDOG, that has also been featured recently in the channel. So let's get straight into having a look at the new potential calculation for MMTLP based on the recent Bridge Hydrocarbons attendance at the NAPE Energy Conference. So this is one of the slides that they shared at that conference with potential investors. So if we focus on the section here under upside exposure, so what the company has stated here, they're looking at potential initial 370 well NAV model showing a lower pen development potential in a range of $1.3 billion to $2 billion. But the assumption here, which I think is the good thing that Eric has picked up on, is this is based on only one of the 7 potential formations being successful. So let's have a look at the calculation. So one of the reasons why the company were there is potentially attract investment. They do need cash, and obviously that is something that is essential obviously for drilling, but I think for the short to medium term hopefully they should be okay. But in terms of the analysis of this, what he stated here, we're looking at $1.3 to $2 billion, 370 wells, and only if 1 to 7 is successful. So let's assume all 7 are successful. So if we'll use the 7 wells at 1.3, that's giving a figure of $9.1 billion. If we look at the 2 billion revenue and all 7 wells, then that's giving a potential $14 billion return. So that is for the 370 out of the 3,150 possible well locations. 12%, so 100% is at 8.3 times that to the full figure, you're looking at a figure between 75 billion and 116.2 billion dollars. So looking at a 7 to 9% recovery rate. Again, the estimate here from Eric is potential valuation of $1 trillion. So let's have a look at the reactions for this. And obviously he stated here, first of all, the thing to note is the 1 trillion being the absolute maximum potential if everything goes well. And if it doesn't go well, let's say it goes 50% as good as expected, that would be $500 billion. 25% successful, then obviously $250 billion. So the 1 trillion is based on full potential and 100% success. So we're going to now look at an input, or should we say a reaction from the bird lady, and what the bird lady has posted here is obviously is a little bit cumbersome to explain. She says you are correct in the $1 billion is a return on the investment for the initial 2 to 5 wells for phase 1 and 2. Phase 1 is for 1 pay zone, and obviously it's not defined how many pay zones there are for phase 2. So we're looking at 10 years, you might get $1 to $2 billion in revenue. You will also have call options for the rest of the property, and that will be a separate deal. So there is basing this on NYMEX strip, which is New York Mercantile Exchange pricing, which is obviously market pricing for oil and gas futures and potential OIP and GIP, and that gives volumetric oil and gas in place in the pay zone. So what she's also stated to extrapolate this out across the entire property, she's not sure because the hydrocarbon levels are not consistent in volume throughout the property, and some have more or less. This depends on the rock, the strata, the compression, etc., source material. But overall, what she stated, you are correct in this being a generational production. So definitely long-term potential there. And just to finish off on this estimate and calculation by Eric, we're going to look at a potential valuation for MMTLP shares based on the absolute maximum $1 trillion. So if we look at 500 million shares, then that would equate to $2,000 per share. So again, if we half it, $1,000 a share, and if we half it again, $500 per share. So long-term good potential, but for right now, we certainly need a buyer. I'd like to do is respond to a recent FUD article in the New York Post by Charles Gasparino, and what he stated in the article in terms of his headline, he stated that Ralph Norman, obviously the Congress member here, is down a massive rabbit hole after his latest meme stock conspiracy. So I have responded to this with a post, and what I've stated earlier in response to Charles Gasparino's attack, and I've stated here, it's an interesting article. You've attacked Ralph Norman, and you've also attacked the MMTLP community, but what he doesn't know is the community, obviously we may have our differences, but unlike many other communities, we are probably one of the best communities that I've seen, certainly in terms of due diligence, examination of securities law, reaching out to Congress. We all know the amount of effort and work that Don has been putting in, and obviously responding with facts to Congress, and obviously looking at any other trading communities, I certainly do not think that is the case. So in terms of Charles Gasparino, if he had certainly got any common sense or understanding of the financial markets, what he should be doing is asking questions in terms of potential alleged breaches by FINRA of Rule 6490. Obviously that is their own rule, looking at processing of company related actions. So again, huge amount of due diligence on there. Also looking at SEA Rule 10B-17. So I'm not sure if Charles has had the opportunity to look at that, but I would suggest he go ahead and do that. Looking at contradictory and misleading statements also by Jeff Mendel, certainly another fact that he is very conveniently ignored, and obviously the vice president, and what harm also would there be in releasing the trade data. So obviously if it's a reason for it to be confidential and it would create harm that, you know, with regard to something that traded over 440 days ago, then let's see what that harm would be. Certainly I don't think there is any harm. So overall, what he's doing is obviously he's taking pleasure in attacking US investors that have lost dollars, international investors that have lost dollars, for buying into what he calls a meme stock, and also something that he has got absolutely nothing to do. So he's saying basically investors did not understand the rules. So what he must also do is then say that Jeff Mendel also did not understand the rules. So remember, Jeff Mendel, representative of the OTC markets, we know that's been covered by one of the viral posts by Terry. So what I've also finished off by stating in terms of Charles's background, he does have a history of misleading statements. One of the things that he's alleged to have done in an article, just I've read it on the Washington Post, it claimed that Charles Gasparino was claiming to be a Pulitzer nominee as a journalist to obviously make himself a career and become successful and get jobs and get areas of prominence. So so the question to Charles is, did you lie about this obviously claim to further your interest to become a successful journalist? So that is something that investigative reporter Bill Didman also criticised you for, because obviously you conveniently omitted the truth. So as a person with no background, you certainly seem to be very, very keen, eager, and spending huge amounts of time attacking the MMTLP community. So the only question is why? So and the only other reaction I'm going to share with you here is from Gandalf in response to the same article. He started saying, nothing louder says that we were over target when you have a tool writing a hit piece on Congressman Ralph Norman and also a hit piece on MMTLP. So you know that they are desperate when they resort to personal attacks rather than rely on the facts. So are they running scared? Potentially yes. Finally, I'd like to finish off by giving a shout out to the previous week's weekly watch list, which was quite successful in terms of many of the calls. So if you'd like to get the next weekly watch list, details are in the description below, and this will be shared prior to trading on the Monday. But last week we called out KPTI, that was up 13.6% on the week. The best call that we had was INBS, and that was up 134% on Friday and also up 71% on the week. So congratulations to everybody who got in INBS. Another great call was SKYE, that was up over 55% on the week. PRAX, that was up 13.7% on the week. PEPG, that was also a great call, that was up 28.6% on the week. KOPN, that was up 9.9% Friday, and also closed up 3.8% on the week. NERV, another call in the watch list, that was up 37% Monday to Wednesday and also up 8.3% on the week. Vera was up 15% on the Friday and also closed up 13% on the week. So again, congratulations to everybody who got in Vera. YRD, that was up 13% Monday to Wednesday, and then there was a sell-off and it was down 4.3% on the week. So not all calls are successful. MINM, that was also quite a volatile stock, that was up 7% Monday, 10% Friday, overall down 17.7% on the week, obviously illustrating the risks of trading on the market. So not all calls are successful. And finally, thank you very much for watching. Please stay tuned.